Hey, welcome back everyone. This is Uncle Frank, and I am not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Okay, guys, you were smart to click on this one. In this episode, we'll cover all the vital information you need to know for the coming weeks. Wall Street posted a 3-week win streak on Friday. Write that down. Propelled by strengthened expectations for another interest rate cut by the Fed Reserve at its final Monetary Policy Committee meeting of the year. This week also marked two big milestones. The S&P surged past 6,100 points in a historic first, and the benchmark index has now smashed past the year-end targets of most of the brokerages on the street. Meanwhile, Bitcoin finally surpassed the 100,000 level after languishing below that milestone for nearly a month. In the terms of the economic calendar, the major data point this week was the U.S. non-farm payrolls report for November. Coming off the heels of a particularly weak October report, job growth bounced back last month with additions of 227,000, a figure that comfortably beat the consensus. Additionally, the unemployment rate ticked up to 4.2 from 4.1%. The reading showed that the labor market was continuing to remain resilient, and it sets up the Fed for another rate cut. One of the most notable events this week was the tragic shooting of the top boss of United Health's insurance business. Brian Thompson was shot and killed Wednesday morning outside a Midtown Manhattan hotel where he was scheduled to speak at the company's annual investor conference. Okay, as many of you know, Uncle Frank is Italian, and we interpret violence like this in a very linear manner. In other words, we connect the dots real quick. So when someone is murdered this brazenly in public and on camera, we'll point to the obvious. Either United denied the wrong claim for a sick person, someone was determined he never make that speech he was scheduled to make, or because he was facing multiple investigations, someone decided this CEO was going to flip and turn state's evidence, so they took that option off the table. Judging by the hipster doofus that shot him, my camp says United denied the wrong claim, and this is an activist slaying. United Health is the largest healthcare insurance agency in the United States, with $371 billion in revenue. As CEO, he was paid $10 million per year, less than half of what they pay Adam Aron. For context, AMC only grossed $1.4 billion in 2023. When you hit Starbucks prior to putting in wet work like this, wear a backpack of this size, and then your getaway vehicle is an electric bike, you are a hipster doofus hitman. Now, check this out, guys. The Dow lost 0.6% last week to finish at 44,643. The all-time high, 45,073. That's 48 record closes for 2024. S&P 500 added 1% to finish at 6090. All-time high, 6099. That's 57 record closes for this year. NASDAQ gained 3.3% to finish at 19,860. All-time high for the NASDAQ, 19,863. 36 record closes for 2024. Write that down. Now, out of the S&P 500 sectors, who led the way last week? Consumer discretionary, up 5.9%, followed by telecom at 4.1%. Who lost the most? Energy, shedding 4.6%, and utilities down 3.8%. Commodities, crude oil, WTI, lost 1.2%. We're at 67.2 a barrel. Gold shed 0.8%, hanging in there at 2659.6 an ounce. Natural gas lost 8.5%. It is freezing here in Chicago. I don't see how. I don't know. What are you guys, warming your house with coal and wood over there? The 10-year bond still too high, 4.148, lost 0.2 basis points. Now, on crypto, last week, Bitcoin obviously had its big day, but 2.8% for the week. Ethereum 7.7%. XRP 24% gain for the week. Top gainers worth mentioning, SMCI up 35%. Lululemon up 25%. Palantir up 14%. Listen, we can all agree that the big indexes are at or near all-time highs. Okay, so the last PCE reading came in elevated. It was up 0.2% from the previous month and 2.3% from the previous year. Wall Street posted a 3-week win streak this past Friday. We all agree that the indexes are at or near all-time highs. Bitcoin hit 100,000 for the first time. Call me crazy, but we may be due for a pullback here. I'm not rooting for a sell-off, correction, or crash, but let's admit these things are a possibility. Just because everyone is excited about the Trump election doesn't mean all of our problems went away. Nothing has really changed on my potential black swan list. We are now only 44 days to the inauguration of President Trump on Monday, January 20th, which also marks the exit of the shittiest SEC chair in its history, Gary Gensler. Now, before we go through the gauntlet of economic landmines on this calendar, I need to show you this. So here is CPI up till October. The blue line is CPI all items. The green line, CPI less food and energy. Yes, the Fed has made progress, but CPI less food and energy is flat, and CPI all items hooked up. The key takeaway for October was headline CPI rose 2.6% year over year, up 2.4% from the previous month. The CPI report for November will be released on Wednesday, December 11th. Inflation is down substantially from peak levels. The key question is when and if inflation will hit the Fed Reserve's 2% annual target. Inflation nowcasting from the Cleveland Fed Reserve suggests that headline inflation may see another increase to a 2.7% annual rate. That would be an acceleration from October's 2.6%. Core inflation, which excludes food and energy, may remain at 3.3%. That would be the same level as October. Okay, now here's PPI from the previous month. U.S. wholesale prices accelerate. PPI also showed pickups in categories that feed Fed's preferred inflation gauge. This seems to be hooking up as well. The question becomes, if we get hot numbers on both CPI and PPI, do we get a pullback or worse? Can they be hot enough to discourage the Fed from cutting at the December meeting? Now, I need you to be aware, after those hot PCE numbers we just got, any subsequent hot numbers could have a profound effect on the markets. So everything now is amped up. So before the Fed can cut rates again, we need to walk through the following minefield of releases, any one of which could send the already elevated markets down sharply. But now, let's review what I'm excited about. Tomorrow, Sunday the 8th, we'll finally see the CEO of Ripple's interview on 60 Minutes. Holy shit, and more about that later. Then, the original meme stock GME reports on Tuesday, December 10th after the close, and Roaring Kitty is tweeting again. Now, because of that, I'm growing concerned that if Ryan Cohen doesn't say anything about his $4 billion war chest and the future of GameStop on that call, we could see some trouble. GME's been doing pretty good lately. Then, all eyes turn to Wednesday, December 11th, CPI. Thursday, PPI. This is all red-hot inflation data, and it may decide whether we get a rate cut in December or not. I'm beginning to bet against it. We could also get a sell-off in the indexes or worse, so we have to be prepared. Me and my partner, Jordan, a.k.a. the Boba Fett of Michigan, have identified 3 VIX states we're long the calls on for protection to the downside. Wednesday the 11th, Tuesday the 24th, And in January, 2 days after the inauguration, which is Wednesday, January 22nd. Now, Monday, December 16th, services and manufacturing PMI, basically the last thing before the Fed meeting. And then the last Fed meeting for the year, Tuesday and Wednesday, December 17th and 18th. We get the decision on the 18th. Will we cut? Will we stand pat? The market hates uncertainty, but Uncle Frank lives for this kind of shit. And finally, the last quadruple witching date of the year, the third Friday of December, the 20th. The last quad date is usually the hottest one. And this comes one day after a rate decision with a new president coming in that also has both chambers behind him. There's going to be a lot of portfolio adjustments going on, guys. This one could be the killer. This is not investment advice, and I am not an investment advisor. Now, guys, I believe XRP is on the threshold of making crypto history. But before we can see that happen, we have to see the complete exit of Gary Gensler. Look at these headlines from the past 24 hours. SEC rejecting Solana ETFs is Gensler's parting gift to the crypto industry. SEC to reject Solana ETF applications, delaying approval. SEC signals it would reject spot Solana ETF filings and pause new crypto ETF approvals. Well, that includes the 4 that are in the pipeline for XRP, including Grayscale's converting its trust into an ETF. So the ETFs are on hold for XRP, in my opinion, until after January 20th. And word is getting around from Saturday, XRP targets $3 milestone as Ripple CEO Brad Garlinghouse prepares for 60 Minutes spotlight. Ripple's CEO's 60 Minutes appearance on December 8th sparks excitement, emphasizing U.S. crypto regulations. XRP surged 30% over the week, reaching 2.44 with a market cap of $139.29 billion. Analysts predict XRP could surpass 3, eyeing 330, with strong support levels at 213 and 227. Now, this is not investment advice, and I am not an investment advisor. I will never tell you to buy, sell, or hold any security or cryptocurrency. But at the time of this recording, I have XRP at 251 in the 3rd position as the largest crypto project by market cap. It flipped BNB, it flipped Solana, it flipped Tether, and in 2025, I predict it will flip Ethereum. So everyone is constantly asking me, Uncle Frank, how high do you think XRP can go and when? Well, I don't have a crystal ball, but I can make some guesses of my own. I say we set a new all-time high by no later than the end of next month or sooner. That could even happen after Brad's interview tomorrow, but who knows, right? If I were his attorney, I would recommend they don't air the episode until the SEC's appeal is officially over and Gensler is out of the SEC forever. But I believe we will catch the all-time high of 384 unless there's a sudden crypto crash and maybe even settle somewhere between 4 and 5. I also believe we will catch Ethereum's market cap over the next 24 months, which could push the price range between 750 to 10. But what about 100? Can we do 100 or even 1,000? Well, yes and no. You see, at 100, we would have a larger market cap than all of the crypto universe combined, or 5.71 trillion. That seems unlikely now, but in my opinion, if any coin can do it, it's XRP. If XRP can capture a significant portion of Swift's business, which transfers 5 trillion a day, or even replace Swift, then almost anything is possible. I'm pleased to report my guess isn't far off from a popular tech analyst covering XRP, emphasizing the enduring bullish momentum of XRP despite the short-term correction. Dark Defender identified price targets at $292 and $399. Achieving these targets would represent increases of 27.5% and 80% from current levels, respectively. Notably, surpassing the second target would propel XRP beyond its current all-time high of 340, a ceiling unbroken for nearly 7 years. Current market forces and buying trends suggest this milestone may indeed be eclipsed by year-end. And there's the headline from Deadline. AMC stock falls after exhibitor reveals plan to sell up to 50 million shares. Investors fume on social media. Well, there's nothing left to say, guys. This man isn't helping Wall Street. He is Wall Street and always has been. If you walk around our boardroom, I dare you to show me someone who isn't Wall Street. This disgusting man is a distressed credit, private equity executive, and a Wall Street prime broker exec runs our board. There are no theater executives running this firm. I said the stock was dead money without a swan event a year ago. I said it could follow GME up when it spikes, and I was right. The stock had one good day before he stopped it. He's done this a dozen times. The only good news I have for you is one day he will suffer terribly for what he's done to millions of shareholders. He'll go out the same way Epstein, Madoff, Weinstein, and countless others did. The sooner the better. Now, a couple of days ago, Benzinga reported Archer Aviation stock hits a golden cross. Our bulls cleared for takeoff. Uncle Frank told you to watch for the cross weeks ago. Turns out the stock was cleared for takeoff, because then on Friday we got why Archer Aviation stock is soaring again today from the Motley Fool. But guys, let's take a moment to appreciate our golden cross, because it's a beautiful thing. Watching that 50-day moving average overtake the 200-day moving average in the face of all the short sellers is like a collective middle finger from all of us. On Friday, Archer closed at $8.28, up 62 cents or 8.09%. That puts us at just under 155% for the month. So what was all the hubbub about on Friday? Abu Dhabi and Archer announced agreement with cross-industry stakeholders to launch first commercial electric air taxi flights. The partnership brings together key entities across the aviation sector in Abu Dhabi, with Archer Aviation serving as the primary eVTOL aircraft manufacturer for the Emirates' planned electric air taxi operations. Here's the good part. The agreement positions Archer as the first in Abu Dhabi to establish manufacturing capabilities. That's right, guys. We're going to build them there too. We're not just a prototype anymore. We're going to manufacture them and fly them. This is going to happen, not investment advice or advisor. The Abu Dhabi Investment Office will facilitate the safe launch of commercial eVTOL operations in Abu Dhabi as soon as possible. The UAE General Civil Aviation Authority has been working closely with the key stakeholders, most recently through a week-long certification workshop at Archer's headquarters and flight test facility. Now, guys, I have to be honest, I was a little concerned about the exit of the Stellantis CEO. Maybe the new CEO won't be a fan of flying taxis, right? But I'm not worried about that anymore, because Archer Aviation retains a champion at Stellantis amid leadership upheaval. The abrupt resignation of Stellantis CEO Carlos Tavares on December 1st has raised many questions about the future of the multinational automaker, which has been grappling with a plummeting stock price and slow sales across many of its brands, including US-based Dodge, Ram, Jeep, and Chrysler. Amid the general uncertainty around the company's future direction, One question is of particular interest to the aviation industry. What does this mean for the company's relationship with Archer Aviation, including their planned manufacturing partnership? Tavares was a vocal champion of Archer, and Stellantis' generally grim financial outlook would not seem to bode well for speculative investments in eVTOL startups. However, Tavares was not the only advocate of the partnership within Stellantis, and the person who orchestrated the deal is now on the interim executive committee that will be responsible for the company's direction and oversight until the board appoints a new CEO, which is expected in the first half of 2025. Look, guys, when you're a pre-revenue company, that means you can become a target for predatory short hedge funds at any moment. The only way to fight back is to keep hitting the milestones of your business plan. Keep capturing new customers. Keep diligently moving through the certification process. I still believe the next announcement from the company will be that our high-volume manufacturing facility will be finished on time and on budget this month, so over the next 24 days. Eventually, we'll be cranking out over 600 aircraft per year out of this facility alone. President Trump has said publicly that he wants these planes manufactured in the U.S., not China, and I think that adds even more pressure on the FAA to get on with the certification process. This facility is located in Covington, Georgia, adjacent to the Covington Municipal Airport. I'm hearing the 400,000 square foot facility is nearly complete, with the final phases focused on interior fit out and equipment installation. Not investment advice or advisor, but I say this news drops over the next 3 weeks. And now a slide for my gold bugs. China unveils world's largest gold deposit, shaking markets. A monumental discovery in China's Hunan province has redefined the landscape of global gold mining. Beneath the Wanggu goldfield in Pingjiang County lies a staggering deposit of gold ore, estimated at up to 1,100 tons. If confirmed, this would make it the largest known deposit of any precious metal globally, overshadowing even South Africa's South Deep gold mine, which holds around 1,025 tons of gold. This vast deposit, valued at approximately $83 billion, could transform China's standing in the global gold market. I wonder what this means for Hycroft investors over the long run. Wow, guys, I love it when they lose. Tesla skeptic from The Big Short gives up his position for this big reason. Tesla skeptic Danny Moses, who was portrayed in the Big Short movie, has revealed he has given up shorting the electric automaker's stock for this big reason. Moses appeared on CNBC to talk about stocks, and when he was asked about his short position on Tesla, he said he had exited it. Quote, "When the story moves from non-fundamentals to technicals, that's when I leave the story. It's very difficult to short a name that is not trading on fundamentals. It's also hard to go long a name when it's all on promises." He's also skeptical that Musk will be able to do what he says in his new post in the Department of Government Efficiency, or DOGE. Moses is not the first outspoken Tesla critic to exit their position after being burned by the stock's performance. Jim Chanos is one of the most notorious investors who shorted Tesla and ultimately decided to ditch the position. Yeah, that's because he got his ass kicked in epically. Sounds like a mouthful of sour grapes to me, Danny. Stop betting against groundbreaking innovation and alpha entrepreneurs like Elon Musk. Hopefully Gates will get obliterated next, and then Archer shorts Citadel and Susquehanna. South Africa says BRICS has no plans to create new currency after Trump issues warning against de-dollarization. That's how it's done, guys. President Trump has done more for this nation in the weeks leading up to his inauguration than Biden has done over the past 4 years. Guys, I saved the best for last on Archer. This slide goes out to my man Barry, who put me on this company 4 years ago when it was still a SPAC. Here's your headline. Billionaire investor abruptly dumps $20 billion portfolio, pours cash into 4 assets. The head of a $210 billion asset management firm has decided to unload a massive pile of assets. Billionaire Israel Izzy Englander, CEO of Millennium Management, has sold off 68% of the firm's Walmart position, 8.1 million shares, worth about $745 million, according to its latest filings with the SEC. According to data compiled by Ticker Tracker, Millennium has also significantly decreased its holdings of blue chip stocks Apple, Nvidia, and Amazon. In total, the shares sold by Millennium Management in Q3 amount to more than $20 billion. Meanwhile, Izzy has reportedly increased the firm's exposure to BlackRock's iShare Bitcoin Trust, as well as Microsoft and Spotify. Englander is also shifting his focus in the electric vehicle industry, selling 95% of his firm's shares in Rivian to get into the electric air flying taxi company Archer Aviation, a favorite of ARK Invest's Cathie Wood. Englander acquired 3.2 million shares of the company, while Wood has been accumulating Archer since August of 2023. Archer is down 53% from its all-time high of $18.49, but is up over 204% in the last month alone. Millennium Management has recorded 162% gains over the last 4 years. So let me get this straight. One of the meanest traders on the planet just dumped all his big caps and bought my pre-revenue eVTOL stock along with Cathie Wood. Sleep tight, Susquehanna. Guys, I'm not trying to spook anyone. I always hope for the best, but be ready for a sudden pullback because the data may not support the decision the Fed is about to make. Fed officials flag inflation concerns ahead of meeting on rates. On Wednesday, Fed Chair Jay Powell took a measured view of the current state of the economy, describing a solid backdrop, but with lingering inflationary pressures. Quote, "The economy is strong, and it's stronger than we thought it was going to be in September," Powell said. "The downside risks appear to be less in the labor market. Growth is definitely stronger than we thought, and inflation is coming a little higher. So the good news is that we can afford to be a little more cautious as we try to find neutral." Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.